Hi there, welcome to Kneppy Invest and welcome to February 21, 2025. Pretty bad week. In fact, 5 down days in a row. And I think the XJO is down about 3% this week, not helped by the banks. Banks have fallen like a rock. And I have a feeling the banking sector might be down about 8% in the past week and a little bit. Anyway, the results that I was looking for came out last night. Telix Pharmaceuticals, probably one of my most anticipated results, not necessarily because of the numbers they were going to produce in this financial year. I was actually looking forward to any sort of future guidance the company was going to release, and I was not disappointed. Now, I have recorded a standalone video for Telix stock of the day. I'm a little bit biased, but one thing I was going to do in that video was show you a quote. Thankfully, Trader Hooper, there it is, Trader Hooper gave me that quote in the comment section, and I did find that quote in their transcript via FinChat. You can get any company's transcripts via FinChat. And if I don't forget, I'll show you this particular quote. And Trader Hooper mentioned that, what did he say? I thought you'd like that. He sounds like you, Kneppy. And that's probably one of the reasons why I'm quite attracted to this company. Not in that sort of way, but why I do like this company is because of their capital allocation decisions. Anyway, so I'll talk about Telix a little bit more. We've got to get rid of that. I'll talk about Telix a little bit later in the video, but a standalone video, wait out for that. I am working today, so I have to be a little bit quick today, by the way. Interesting day, a really interesting day when it comes to the amount of results we did say. I thought it was going to be a little bit less. There were quite a few. Not only that, a couple of acquisitions. And I'll talk about those companies that have been acquiring. And funnily enough, 2 major acquisitions and the flow and effects to another company that I'm trading, by the way, Nine Entertainment Group, have been spectacular. I did not realize Nine Entertainment Group owned Domain. Domain's been possibly taken over. And we saw Nine Entertainment Group, because they own shares, share price go up a fair bit. So Telix, stock of the day. Alcidion did not release results, but they announced a contract and the share price rallied enough for me to put it into the top 5 stocks of the day. Spark New Zealand, I was thinking that maybe the bottom had been reached. Nope, results pretty bad. So we'll talk about that company as well, coming in number 3 in the top 5 stocks of the day. Energy One, a company I've held in the past, and I wish I held it now. Share price up significantly on the back of their results. And then coming in number 5, we have Domain, Mayne Pharma, and Nine Entertainment Group because of acquisitions. Many other companies that I could be talking about, just company after company. In fact, I listed all the companies that could make it into the top 5, and I listed about 13. And those companies that did not make it in the top 5 included Lindsay Australia, Laserbond, Accent Group, PWR Holdings. They released their results last night. QBE, Latitude Financial, Guzman Gomex released their results today, first results, I think. Hostel, Jumbo Interactive, and Peter Warren. And apart from those companies, a slew of other companies released results, and a couple of really small cap companies, I saw their results and they're profitable. I might briefly mention those companies in the video. I just got to make sure. I tend to forget. Whenever I think of that, I tend to forget. Okay, so what I'll do in this video is just go quickly through the market today and then focus on some of these companies that did release results, particularly the top 5 stocks of the day. Now, negative day today, not unexpected, because Dow Jones was down 1%, and we tend to follow the Dow Jones a little bit more. I thought if we were up today, it wouldn't be a massive surprise because we've seen 5 down days in a row, which doesn't happen all that often, and a fairly negative week. In fact, so far this week, the XJO is down about 3%, I would believe. And there we are. There it is. Down 3.03%, and we just had a bad week. So I've just mentioned that it's not usual to see the XJO down 5 days in a row, but it does happen. Last time we saw it was back in December, and before that, you have to go all the way back to a few years ago. So it doesn't happen all that often, but it just, we're coming off an all-time high, so it's okay to see the market pull back. Other than that, I would say another weekday for most sectors, apart from materials, up 1.56%. But those that have seen weakness in the past week, including financials, have seen another weekday Telecommunications and discretionary, a pretty bad day as well. In fact, if you have a look at the last week, financials down 7.7%. Yes, 7.7%. And if you have a look at the banks in the past week, down 10.3%. 10.3%. Has the banking sector bubble burst? Maybe. Not all of them are down big. In fact, there is one company I am trading right now, Judo Capital, that's doing fairly well. And this is, if I did have to invest in the bank, this would be it. And I'm trading Judo. And, trading view is so slow today. And it's still looking pretty good. Still looking like a pretty good chart. Okay, so let's turn our attention to the top gainers. We'll do it like I usually do it. Yesterday was a little bit of a one-off. So the top gainers of the day, we'll do this by markup just to make it a little bit easier. No, actually, we can do it by percentage change. Yeah, let's do it by percentage change. So Domain Holdings, takeover bid. Beam Communications did release their results, unprofitable, but they did talk about improving conditions. So I'm not necessarily surprised to see the share price up, but it's on loan turnover. So I'm not sure if you can believe that. Mayne Pharma, another takeover bid for that company. We'll talk about Energy One, share price up 30% on the back of their results. I used to be a shareholder. I sold many years ago, and I should have bought back in because the share price moved into an uptrend. I was thinking of it. And sometimes if you linger and be patient, it doesn't help. So Energy One up a fair bit, and I'll talk about that company in a little bit more detail later in the video. Alcidion also had a really good day, up 29% on the back of a contract win, a pretty good contract win. And there's Nine Entertainment Group up 20% because they own some Domain Holding shares. So it makes sense, doesn't it? Other than that, Veeam released results. Was it yesterday? I did write it down somewhere. It must have been yesterday. Yeah, it was yesterday. Up today, and that's it. So let's just turn our attention to top gains by market cap. There's Telix up 13.83%. Austel released results today, pretty good, up 13.2%. Drone Shield, someone did mention Drone Shield in my comments. Where is it? Karat Singh, Drone Shield breaking out. We can have a look at that right now. Drone Shield breaking out. I don't know why TradingView is really slow. This is not helpful. You know what I could do? Get rid of some of my apps like that. There you go. That should... would I call this a breakout? Not quite. A couple of really good days in a row. But we see this a lot. Share price will rally a fair bit. And then the share price finds a little bit of weakness and then pulls back. So I'm not getting excited just yet with Drone Shield. But again, I'm different. I'm different than all the other investors out there. My rules might be a little bit different than yours. And a nice 2-day rally and some pretty good volume. So maybe this does fit your rules and this could be a breakout according to your rules. So not for me just yet, but getting close for Drone Shield. And Krat also mentioned Telix stock today. Yes. Yes, and missed jumping into Energy One, up almost 39% today. Share price must have pulled back. Anyway, so let's go back to top gainers. Mount Gibson, no, Paradigm, keep going up, Paradigm. I want to exercise my options in a year. Retail Food Group, I thought they released really good results yesterday. Share price up another 8.6% today. Was it yesterday or the day before? Anyway, I like their results. They also announced an acquisition. It wasn't yesterday, it must have been the previous day. I like that acquisition. I just like subs. Anyway, and where was it? Oh, FBR did announce something today, but that's probably it. Piedmont did release results today, a lithium company in production. Okay, that's about it. Let's have a look at the top losers. Laserbond. Okay, this is so I've talked about I used to own NG1, share price up. I also used to own Laserbond, share price down at 21%, not in my top 5 stocks. Just shows you that sometimes a company share price can move a lot and it doesn't matter. So let's have a look at Laserbond. And I did have a quick look at their numbers and I was like, eee, didn't look good. It didn't look really good at all. I think it was revenue was flat or down slightly, profit was down, and I did not have a look at this one, so I'm going to blind this one. So revenue up slightly, 0.1%, and profit down to $1 million. Guiding for a nice increase in revenue and also increase in profit before tax. So it's funny, they've guided profit before tax. So who knows? Who knows? I'd just like to see them guide. Maybe they don't know what their tax is going to be. I don't know. So they are saying or suggesting this company will experience a little bit of growth. So maybe the market was disappointed with that guidance, or maybe it was just the current numbers are well lower than expected. Now, one of the reasons I sold out of Laserbond was simply because of the chart. So this was a case where I just listened or looked at the chart and went, oh, I don't know about this company just yet. No. What's happened? There it goes. And the chart right now looks pretty weak. So I sold. Oh, this is not updating. So many things are going wrong. Auto fit. That's what I want. Auto fit. And I sold out of Laserbond. Oh, when was it? It could have been about a year ago, I think. Could have been a year ago when they released their results. Share price did dip. Yeah, it would have been a year ago. Share price dipped 14% a year ago, and I didn't like the results. I didn't like how the chart was looking. So I thought I'll just get out, and then I can buy back in if things turn more positive. And I haven't even thought about buying back in because the chart looks horrible. But I'll be honest with you, with the share price down at these levels, I could and might take another look at Laserbond as a possible value play. Okay, so that's Laserbond. 40 Medical, don't know what happened here. I'm trying to remember if I did see the T code in the announcements. I think I did. There you go. Oh, they did a couple raisings, so we can move on. That's probably why I couldn't remember. Don't really care about couple raisings. Well, when I say don't care, I mean, obviously, most capital raisings are done at a discount, so you will see the share price drop. That's why the share price has dropped. It's quite obvious why the share price dropped. Spark New Zealand in my top 5 stocks, down 19%. For that size company, impressive. Lindsay Australia down 15.5%. Saw their results and went, not good. So I won't have a look at the results. They weren't impressive. So let's have a look at the chart. So this was a bit of a market darling not that long ago. Oh, this is getting annoying. I'll tell you that much. I must have, what I might do is just get rid of you, get rid of trading economics, get rid of you. Hopefully getting rid of some of these tabs will help. I might just get rid of, no, I won't get rid of that. So hopefully that helps. I think it is just maybe I have a few too many tabs or too many apps open. Anyway, so this is Lindsay Australia. Chart looks pretty right now. And this is definitely the sort of company that you wouldn't want to own for the long term. But you can see the share price was in a beautiful uptrend back in 2022 and start of 2023. I did actually get quite a few questions about this company from colleagues and friends. And I just said, would you want to invest in this company? Well, actually didn't say anything because it's up to them to decide what to buy. But if I did say anything, I would say, just be careful because this company did have a few things going for it, some tailwinds behind it that they weren't in control of, including a competitor going bankrupt or something like that. And it looks like the good times have come to an end for Lindsay Australia. Share price has now dropped significantly and share price is at a 2-year low. Anyway, so let's go back to losers. Guzman Gomex down 13.25%. It's really hard to know and to decipher, but not decipher. The numbers were good, really good growth, but the question is, was or did the market expect more from Guzman Gomex? I don't know if they released any sort of outlook. Not surprised the share price is down because this company was priced to perfection. Would I buy with this dip? No. Even if I like the chart, no, I don't know. Why is it so? Look at this chart. So a really nice looking chart. So the time to buy this was just after it dipped a fair bit back in July. But yeah, this is a pretty negative response to results. Some big volume coming through today. Long term, I'm in two minds when it comes to Guzman Gomex, their potential growth in the future. I think there is potential. I think that growth will continue in Australia. It all depends on how they can aggressively grow successfully overseas. I'm very doubtful and skeptical they can grow significantly in the United States because there's a lot of competitors. And I will say their competitors in that country probably can do a better job, particularly in the South. But maybe expanding in Southeast Asia, I don't know. So I'll have to delve a little bit deeper. But if they can successfully expand overseas, that's where the massive growth is going to be, sort of like Chemist Warehouse. It's one of the things that did attract me to Chemist Warehouse is that potential growth overseas. Anyway, so Guzman and Gomex down a fair bit on the back of their results. And PWR Holdings, this one's a little bit of a surprise because they actually did beat expectations by a fair bit. And I had a look. They released expectations in November, and they beat those expectations. In fact, they stated about that in their announcement. They said, we beat expectation. We beat our previous guidance. Let's see if they mention in the media outlook. Yeah, here we go. In fact, they've mentioned it right here, just below the big table. The NPAT of 4.1 million was above the November guidance. So typically, if a company performs better than the previous guidance, the share price should rally. And that's all I really looked at. They released their results last night. They talked about headwinds, but then things should be returning to growth in the future, something like that. So obviously the market didn't like something about these results and the share price is down. So just because a company can beat their expectations or their future or previous guidance doesn't mean the share price will rally. It could be just negative sentiment. I don't know. Anyway, so that was a little bit of a surprise. I did expect the share price of that company to bounce, but it didn't. Let's have a look at the top losers by market cap. Oh, REA Group. I did see the share price down a fair bit. And I did notice that there was a change of directors' interest notice last night. I believe this is Owen Wilson, the CEO. Isn't he leaving? And he sold like 1,000 shares or 1,700 shares. It's not a lot. I'm hoping the market isn't selling down on REA Group just because of that. That would be a stupid reason to. And I wouldn't be surprised if they are selling down because of that. I wouldn't be surprised to see the share price rally over the next 5 days because of an overreaction. I'm just having a really close look to see if there's any mention of this in Capital Brief because I might have missed something today. Okay. One of the reasons this is really good this side, it tells you a little bit more information like Guzman and Gomex shares sink as franchises soften. Franchises soften, or they better actually improve their buildings if the franchises are softening. Okay, QBE jumps on better than expected results. Yes. So no mention of REA Group here, which is surprising. With the share price down 10%, you would expect a bit of a mention. There we are. Telix Pharmaceutical shares saw on full-year profit growth. I think it's more because of expectations or their guidance for next year. Anyway, I think that's maybe the reason why the share price of REA Group is down because of Owen Wilson selling some shares. And I would not be surprised because we see this a lot. Investors panic when an insider sells some shares and the share price recovers fairly quickly. Again, I've done research on this in the past, and directors or insider selling is not, or there is no correlation between that and the future performance of a company. Zero correlation or very little correlation. When I'm saying future performance in the company, I'm talking about long-term performance. You might see a share price dipping in the short term because of people panicking. Anyway, so there could be another reason behind it, but the chart still looks pretty good. And I wouldn't be surprised to see the share price rally from here. What else do we have here? Codan released results, share price down 5. Redox down a lot yesterday. Further down today, Bega Cheese released results. When did Bega Cheese release results? Oh, yesterday, share price down today. Can't remember what happened yesterday, but who knows. News Corp share price down because REA Group. Bit of a correlation there. News Corp owns a fair few REA Group shares. Jumbo Interactive down 8.9%. I know quite a few people who love this, maybe not love, but who do own this company because they lottery, and I suppose there'll always be a lottery, but not the sort of company for me. Plus, the chart looks horrendous. It's been looking horrendous for a while, ever since their August results. Massive down day in August, down, what was it, 20 or 16.2%. and that was sort of the catalyst for the share price to be drifting lower. Interesting enough, the share price has rebounded when it went below this little support area. So that's about $12. So it has rebounded off that support zone. What else? Back to top losers. Synlait Milk has pulled back. That's okay. Sky Network released results. So did Peter Warren. And there's Lindsay Australia. Okay, so let's talk about the top 5 stocks of the day. And we'll start off with DHG, Domain Holdings, takeover bid. CoStar proposal for Domain. Unsolicited non-binding indicator proposal for CoStar. So no surprise, the share price is up. It's a pretty much premium, the share price. They did mention here. What was it? A 47% increase? Not increase. Premium to the share price. Oh, they also mentioned, Domain was also mentioned that CoStar bought some shares. Yeah, has stated that its proposed price. No, where is it? Oh, here it is. CoStar advised Domain that it acquired 16.9% of Domain's ordinary shares on the 20th of February at $4.20, and that is their takeover price, $4.20. So share price now $4.37. That's surprising. So what's happening here? So it seems like the market is expecting maybe a bidding war, maybe. Why would you buy? Is that the real? Am I misreading something here? That's what I'm thinking, is that there must be it's 420. I'm not misreading it. It says 420. So that must be suggesting the market is expecting a better offer coming along. The other important thing about this one is Nine Entertainment Group. I did not know Nine Entertainment Group owned shares in Domain, and they actually released an announcement today. So CoStar proposal for Domain, and it's just stated here that Nine Entertainment Group is a controlling shareholder of Domain. I did not know that. Now I know that. There you go. And that's why the share price of Nine Entertainment Group is up. By the way, I won't show the chart of Domain or Mayne Pharma. No, I might show you for Mayne Pharma. Don't really have. Actually, no, I'm going to show all three because the charts for all three were interesting. Domain released results. The results were better than expected. I thought the results were pretty good, and then the chart started to look pretty good as well. And just take your time, Trading View. We're in no rush. Domain Holdings. So this chart was starting to look pretty good. Just take your time. There's no need to rush trading. So the chart was starting to look good. Share price actually did pull back a little bit on Wednesday session, 1.26%. So we didn't actually get a breakout. So that was one thing missing with Domain. No breakout, and today breakout, but takeover bid. So I don't really care about that. Nine Entertainment Group, I bought a trading position in this company on a breakout. This was not a classic breakout because they did not release any results. It was just a nice little turnaround in the moving averages and also shift in sentiment. And then the share price wasn't doing much. And then all of a sudden, the share price popped up 14% on the 11th of February. I think it was on the back of Seven West Media's results. And then today, share price has gone up, but bananas, we'll say, on pretty big volume. So that's what's going to happen if you own some shares in a company that is being taken over. Good times. Mayne Pharma is the other one. And it's funny that both these takeover bids are after companies have released really good reports. So Domain, pretty good, and Mayne Pharma released what I would consider a surprising report, a market update, in fact. It wasn't a report, it was a market update. It was a pretty good market update, and I won't open up this particular scheme implementation deed. Share price up 33.1%. Don't know, I did not open up this, so I would assume that the takeover bid is roughly above this level. What I might do is open it up just to see, have a quick look. And let's just have a look at the chart as that opens up. Maybe I need a new computer. This computer is quite a few years old. When I say quite a few, I'm talking about 7, 8 years old. Okay, so when the company did release that trading update, share price bounced 24.4%. Share price did pull back, and I was thinking, oh, this could be a buy on this pullback. Did not bite the trigger or did not hit the trigger. I did not bite the trigger either because that would be a little bit harder. And to be honest with you, I'm not that bitey of a person. Anyway, so nice looking chart for Domain. Look at that volume coming through. Not Domain, Mayne Pharma. Look at that volume coming through. Massive volume. And let's just have a look at the takeover bid price. And it is at $7.40. Yeah, so a little bit under, which is what you should expect because there's still a risk that this takeover bid won't get through. So you need a little bit of leeway there. And so that's why I was a little bit surprised the Domain's share price is above their takeover bid. So obviously the market is expecting either a takeover bid or an improvement in their price. Anyway, so a couple of interesting takeover bids there on the final trading day of the week. Coming in number 5, we have 3 companies, Mayne Pharma, Domain, and Nine Entertainment Group. Nine Entertainment Group just being put along by the trading, by the takeover bid. Now on to Energy One. Share price up 29.68% on a pretty good report. And share trading policy update. Wonder what that is. I do like this company. I was a shareholder of this company. I probably shouldn't have sold shares, but it's okay. You make decisions anyway. So revenue up 14%, an increase in margins. So EBITDA up 126%, and the company's gone from being loss-making to profitable. So all those other percentage changes are non-applicable. So profit now at about $3.5 million. Wonder which one we're supposed to look at. Profit before tax? No, after tax. Of course, we have to look at after tax. Silly me. For some reason, I thought that was after tax as well. So profit and loss after tax attributable to members, $2.5 million, and earnings per share up to 7.86. So this is for the half year. So pretty good numbers for entertainment. For Energy One, earnings per share up to 7.86. Now, my only problem with that is valuation. It's getting quite stretched at these levels. So the market is expecting some really big growth for this company, and possibly if they release any sort of presentation, doesn't look like they have. Looks like they're doing an investor briefing on the 25th of February. So that's 4 days' time. So let's have a look at a quick chart. So I did like the results. It's just my only question is valuation. So even though this is a brilliant looking chart for Energy One, my only concern would be valuation. But yeah, the time to get in this one was on the breakout back in May of last year, when the share price was just above $4. So pretty good looking chart, but again, my concerns will be just valuation. For Energy One, pretty good volume, probably. Probably would like to see a little bit more volume, but that's okay. So that's Energy One. No complaints about their results, but I'm not surprised either. I've always liked Energy One. They had a little bit of problems over the last few years, but I think those problems have come to an end. Whenever there is something positive, or wherever there's a positive half-year, full-year result, there's always going to be negative ones. So let's have a look at a negative one. And the reason I chose this one instead of like Laserbond, not Blonde, or a few other companies that released negative reports is because Spark New Zealand is a pretty big company. So, and when I say big, I mean it has a markup of, in fact, it should be right here, a much lower markup now. Where is it? Spark New Zealand, there it is. Spark New Zealand markup of 3.93 billion. So we have seen the markup drop probably about $800–900 million. Is that right? Yeah, $800–900 million in 1 day. In 1 day. So why? And I had a look at this, and I'm very happy because I was thinking of taking a trade in Spark New Zealand. I did take a trade a few months ago, and I got out of that trade fairly quickly. And then I was thinking, oh, it's looking like the share price is trying to base, which might be a good sign. Maybe the low has been reached. So maybe now is the time to think about taking a trading position for that turnaround. And I think the turnaround will eventually come. And then they release results, and share price has tanked. As soon as I opened up results, it was pretty obvious the share price was going to. Well, it wasn't obvious, but it didn't sound good. So anyway, so the 3 bullet points here is just negative. Revenue, EBITDA, and NPAT declined in a recessionary environment while Spark maintained its #1 position in mobile broadband. Congratulations, Spark, you're #1. It was also a downgrade, maybe, because I mentioned here EBITDA reduced to $1 million, or just above $1 million. The very fact they said guidance reduced suggests this is a downgrade. While CapEx guidance and dividend guidance were maintained. So just a decrease in EBITDA guidance. So that was a downgrade. So maybe the numbers were a little bit worse than expected, and also downgrade, two things you don't want to hear. So just a downgrade in itself is negative. Maybe the numbers in itself were a little bit negative as well. Tough operating conditions continuing to impact overall performance, that sort of thing. So this is mostly New Zealand, if not completely New Zealand, in regards to like, what's the Australia equivalent? Would it be Telstra? Would the Australia equivalent be Telstra? I suppose it would be, yeah. Anyway, so I didn't go through this. All I needed to know was, the first little bit. It sounded really bad. The Spark chair also has a little bit of a quote here. We outlined that we were experiencing one of the longest and deepest recessionary periods in recent history. Since that time, we have seen no improvement in these conditions, and while there has been movement on monetary policy, this is yet to flow through to any meaningful change in consumer or business spending. Anyway, so I think the turnaround will happen, and I was thinking maybe it's going to happen soon-ish, but I think we can say no to that. Finally, TradingView starting to hit. So to quicken, I have to remember to speak a little bit more slowly sometimes, particularly if I get excited. Anyway, share price of Spark New Zealand moved into a downtrend in early 2024. In fact, less than 1 year ago, 12th of March, around that time. Share price at that point was $4.80. Now it's $2.13. I would have classified Spark New Zealand as a possible high-quality company up until then. The reason I would have said that, without looking at anything, is just the chart. So from 2011 through to 2023, this would have been a chart of a high-quality company. Now you can see, just by having a look at the weekly chart, this company is cyclical. So massive downtrend in the share price for about 6 years. Now it was going up for about 12 years, and we just don't know how long this downward cycle is going to go. It could continue for a while. Last time share price was this low was 2013. So we're talking about 11-year low, 12-year low in the share price. 12-year low in the share price. And that is why I'm interested in the turnaround, because eventually I think the share price will turn around. It's just how low will the share price go. But at this point in time, look how much that share price has collapsed in the last year. It's just a phenomenal chart. So I was thinking the share price is trying to base, and I'm just thankful I was being patient with this one, just waiting for signs of a turnaround or a trend change in the share price. Anyway, so Spark New Zealand coming in at number 3. Number 2, we have Alcidion. Chart broke out quite a while ago, maybe a week or 2 weeks ago. Share price up 30.95%. Alcidion secures 10-year contract with NCIC. So they are securing more contracts. You can see a previous one on the 11th of February. This is the sort of thing I do like when a company keeps on releasing contract wins. That's a good sign, or possible good sign moving forward. Now, in the most recent Appendix 4, say not impressed. Not impressed at all yet. So nice receipts, not much growth in receipts revenue over the past few years, not yet operating cash flow or free cash flow positive. So that's one of my main red flags with this company. But this sort of 10-year contract won't hurt. Sorry. The only way it could possibly hurt, is if the margins are really low, really, really low. But I'm not sure if that's true. So 10-year contract with a total contract value of $37.5 million. So it's a fair bit of money per year. Deployment to begin immediately, with $8 to $9 million expected to be recognised in financial year 25, subject to implementation milestones. So I was impressed with this announcement, and I'm not surprised to see the share price up 20% or 30%, particularly with the way the share price and the chart were looking before this announcement. So there are many opportunities on the market, and I would assume quite a few investors or maybe traders saw this turnaround in our Alcidion share price and took advantage of it. So share price of this company had been dropping and dropping and dropping. Found a bit of a floor back in start of last year. With the share price floor at about 4.5 cents. We have seen a little bit of volatility. So this first potential breakout back in July. That was a false breakout, and the share price dipped low again, and then share price just went sideways for a while. You can see these consistent moving average crossovers, so lower volatility, and then all of a sudden share price started to go up, and we started to see a little bit higher volume. This is a classic breakout. I saw it and I went, nah, that's Alcidion. Not the biggest fan of this company. I was a shareholder of this company for about 4 years, and so I do have a little bit of bias. Anyway, so that bias has been detrimental to me in this instant because share price has really taken off. Share price easily got above 10 cents today, so that's a natural resistance level, and easily got above that level. Possibly, if the share price pulls back to 10 cents, maybe a position taking trade at that point. So impressed, that's all I can say with Alcidion. Pretty good announcement. Okay, so stock of the day is Telix. Results. I'll just mention briefly, share price up 13.8. So why is this the stock of the day, not Alcidion or Energy One? Well, because it's much bigger. And a share price increase of 13.8, in my opinion, is much more impressive for this size company. We're talking about a company with a market cap approaching $10 billion. $10 billion. Now, this company has grown their revenue from almost nothing in 2004. And just to prove that, let's have a look at FinChat. Telix Pharmaceuticals. And the main reason I bought this company was because of that they started to grow their revenue by a significant amount. So if you just have a look at the financial growth, not financial growth, total revenue, there it is. Almost nothing in 2021 up to over $1 billion next year. So over a 1, 2, 3, 4-year period, they've grown their revenue from almost nothing to over $1 billion. That is exactly what I'm looking for, and that's why I bought back in 2021 or 2022. I forget exactly when. Anyway, so the most important thing for me when it came to these results from Telix was not necessarily their results this year. It was any sort of guidance, and the guidance hit the ball out of the park. It beat analysis expectations by a fair bit. They're expecting to grow their revenue by over 50%. From $780 million to $1.2 billion, and we should see significant increase in profit, that sort of thing. So really good result from the company. And I did not have. They had their investor briefing this morning, and then I got a comment from who was it? Trader Hooper, and I went, "Ooh, I do like this comment." So let's have a look at their. I don't know who Speaker 3 is. So this is via. This is the Telix Pharmaceuticals transcript, which I got from InnoChat. And where is it? So this is the quote from whoever it is, could be the CEO, whoever. So frankly, he might have been asked about dividends. Oh, wait there. I'll go before this. Anyone hanging out for a Telix dividend will need to wait until at least then. Not sure when that is. So I'm going to have to delve in a little bit deeper. So frankly, the day that we start paying dividends will be the day that we signal to the market that we have run out of ideas to build shareholder value. Now, in my standalone video, I mentioned the most important job of a company's management is capital allocation. And that is what they're saying, that we have all these ideas and we want to build on this company through these ideas. We're all about innovation and growth. And when a company says that, or company management say that, they're in line with what I want a company to do. I don't want a company to give all their money they have created in their business back to the shareholders in the way of dividends. I don't want that at all. You don't get the growth, the long-term growth doing that. It's one of the reasons why I'm more attracted to tech companies in the United States, because they suppress it, not suppress, but they try to grow. Australian companies don't do that. Well, a lot of companies don't do that. So that is one of the reasons I really like this company and their management, because they are searching for that growth. Now, I'm being unfair on a lot of Australian companies, because there are some companies that just have a token dividend and they are looking for growth. CSL has been classic at doing that over the past 20 years. And at this stage in my investing life, I don't need dividends. I don't need dividends at all. I want growth. I want capital growth. And I'll be honest with you, this company's management, all companies' management should be able to grow their capital better than what I can as an investor. Otherwise, I should be running companies. Anyway, So a great quote from the management here. Not sure who it was. So thank you for that, Trader Hooper. Brilliant. Okay, I have run out of time. Can you believe that? And the reason behind that is because my standalone video for Telix was about 12-13 minutes long. How long was it? I've actually wrote down 13 minutes long. So that's it for today's video. So none of your comments or questions or anything like that. So unfortunately, now I am working tomorrow. By the way, this is my last run of shifts before I take 1 year leave. I do have an overtime shift on Saturday night, but this is my last next Saturday night. This is my last run of shifts before I'm on 1 year's leave. It's going to be a busy year, building a house, hopefully, and also going overseas for a hiking holiday, but be able to do more videos. Anyway, that's it for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.